So first of all, thank you so much, man, for helping with this interview. I think some of the questions that I have in mind when it comes to mortgage financing, right? It's that I think the first question is there is many home loan packages in the market, and people may be wondering, which are the ones to go for, especially in the current markets whereby the rates are just changing. So for you, I think first thing is actually what are some of the available types of package in the market and its differences?
Okay, primarily there's two types of interest rate. So it's fixed and floating. So floating, there's a few kind. First, the most popular one is a cyber package because it's transparent and is pegged to the central bank. Okay. So and there is a fixed deposit rate and the board rate. So both fixed deposit rate and board rate are bank managed rates. So banks can actually control their rates.
Okay.
Yeah.
So there's
I think some of the homeowners thought that fixed deposit rate is actually a fixed rate, but it's actually not. Yeah, it's actually pegged to the fixed deposit rate. So different bank they peg to different fixed deposit rate. For example, like DBS they peg to the 8 months fixed deposit rate.
Okay.
Yeah.
I see.
Yeah.
So does it mean that now with the because bank rates are cutting, they're cutting their so-called their savings rates, their FD rates, so on and so forth. Does it mean that the fixed deposit rate for new loans or for refinancing will also be lower? Or?
Okay, existing case, we do receive a client that bank have dropped a little bit of the fixed deposit rate, but it's actually not much. So mostly have dropped by 0.1 to 0.2. But comparing to Cyber, have dropped by almost 1%, almost 1%. I mean, it's actually more than 1%. Yeah. So I mean, if you see the difference, it's very huge.
Okay. Because Cyber is pegged to is it in the US side or like?
Okay, Cyber is a Singapore interbank's offering rate. So from bank to bank, they will use this standard rates, but they take reference to the US market, and it's controlled by this Federal Reserve. So yeah,
I see.
So I mean, based on the last conversation that Federal have is they inform that they are not going to increase the rates until the employment is back to normal.
Okay, I got it. So so I think now for someone who, let's say, they want to take home loans, right? Generally, actually, what are some of the consideration factors that one should have when it comes to deciding what kind of plans or what kind of packages to go for?
Okay, I think before we decide on the package, I think there's a few pointer to take note. Okay, I think first of the pointer is whether are they going to sell house in the next 2 to 3 years? Because if let's say they were to break the bond, the penalty can be very huge. Usually it's 1.5% of the loan amount. Okay, and second pointer will be what is the market trend. So if let's say interest rate is going up, for example, right, you can consider to actually fix the rates so that to prevent the rates from going up. And I think the third question is that some of the clients actually prefer to actually pay down the loan any point of time when they have the funds. So some of the package does have this early prepayment clause that they can actually pay down the loan any point of time within a lock-in period.
Okay.
Yeah, so I think that's a few points to take before we decide. So usually I will check with them whether do they actually have any preference when they come to the home loan.
Okay. So you mentioned about the number of years that they hold for number of years that they're going to hold for the property, and also that clause whereby they can do so-called refinance, that kind of thing, like whether are they which kind of packages are they more comfortable when it comes to that the lock-in period? Is that what you mentioned?
Yeah, that's right.
So I mean, so then when it comes to the home loans, right, I think I don't know, like personally I have this so-called thinking whereby it's only most people who take private loans are people who are buying like EC, buying condominiums. But for HDB owners, they often go for like HDB rates, like the HDB loans. Can they also take up like private loans, like or how does it work? Yeah.
Okay. There's I mean, if let's say they do have an existing HDB loan already, right? they can consider to refinance, and usually the bank will pay off the legal fee and
Okay.
the valuation fee,
Ah,
right? Then, yeah, so it's actually a full subsidies by the bank.
okay.
So, and there is actually a package that is fixed for 5 years for long term.
Yep.
Because some of the homeowner, right, they worry that if let's say they go for a bank loan, they cannot switch back to the HDB loan.
Yep.
Yeah, so I think so. This is the one of the main point that people are actually afraid of changing to a bank loan. But there is actually a lot of package out there that can help them to really save a lot of money over a long term. For example, like the DBS 5 years fixed 1.8%.
Mm.
I think to compare with current market condition versus HDB rates is 2.6. I can tell you it's really a lot of saving.
Yep. Yep. Mm.
Mm,
Okay. Okay. So meaning to say, if currently I got a BTO, I can choose between going
mm,
for a HDB loan of 2.6%, or I can choose to take a private loan right from the start. And if I take a private loan, then what I just need to do is, okay, I can't go back to HDB, but I can always refinance along the way. Is that what you're saying?
correct. Correct. But for the first application for purchase application, right, the bank will not finance any legal fee or valuation fee. So they
Okay.
will have to pay their own legal fee. So only for refinance, bank
Ah,
have the right to pay off the legal fee and the valuation fee.
I see, I see, I see. So that
Mm,
also means that if they want to decide, it's just more of like whether are they willing to fork out that legal fees, that valuation fees at the start in
mm,
exchange for the
mm.
lower rates as compared to the HDB. Okay.
Yeah, I mean, some of the homeowner, they have no choice but to go for a bank loan, or for example, like a PR, they cannot go for the HDB loan. Yeah,
Oh,
then if let's say you do have a private property loan and you just switch, downgrade to HDB, you cannot go for the HDB loan as well. So this kind of a homeowner, they will have to go for the private loan.
so in that sense, HDB loans is only available for Singaporeans, and
Yeah,
they are not upgrade. I mean, they have not bought any private properties before. They only
yeah,
bought like BTO or resale. Then they can go for
yeah,
HDB.
correct.
Okay. Then that comes to my next question, which is BTO and resale in general when it comes to financing. Is there
Mm.
any difference, like main difference, or it's pretty much the same? Like it's just a matter of like the price and stuff. Yeah.
Okay, I will say the rates is very similar. So, but definitely the loan size does matter when it comes to refinance. But I would say it's mostly probably is like 0.1% difference. So it's really not much of a difference.
Yes, yes. So it's more of like if
Mm.
I'm buying a resale flat because it's slightly more expensive, then if I'm taking a bigger loan, the rates can be slightly lower. It's like, is
Yeah,
that, uh,
possible. Yeah.
cool, cool, cool. Okay, then another thing that I also personally also see hear from people and also including myself is like there's a lot of terms in the market. They call it what repricing, repackage, refinancing. So many re-thing. Okay? But what are they actually like? And when is the time we are referring to this? When is the time we're referring to that? Yeah.
Okay, for repricing is referring to change of package within the same bank. So other terms remain the same, just that the package. I mean, you can actually request to change package within the same bank. So this is called the reprice.
Mm.
Okay, for refinance is you can actually change to other banks, but you can get to change the terms. You get to change the loan tenor and all that. So
Mm.
this is refinance. Okay, repackage I would say is quite general. It could be reprice, it could be refinance, it could be change of loan tenor.
Okay.
For example, like a shorten of the loan tenor or taking up the new term loan. Yeah, so repackage is quite general.
Okay. Okay. So that means pricing is changing of loan packages within the same bank.
Yeah.
Uh, does that mean that the lock-in period also reset, or it?
Yes.
Okay.
It will be based on the new terms from the letter offer.
Ah. Okay.
Mm.
And generally, when someone, let's say, they take a home loan with let's say a particular bank, do they enjoy like a free repricing thing? Like, does it come with it, like for a one-time change, that kind of thing, or it depends?
Okay, it depends on the existing letter offer.
Yep.
I would say current package, most of the package come with a free conversion within the lock-in period or out of lock-in period. So it does come with a free conversion.
Okay. Okay.
So if let's say it's not written in the term and condition, you still can actually put out for appeal, right? If not, usually the repricing fee is ranging from $100 to $800. So it depends on which bank.
Okay. Okay. I see. I see. So free conversion means that there is no fees that have to pay, like even the legal fees, the valuation. There's not none of this, lah. Yeah.
Yeah, that's right.
But when it comes to refinancing, then that's when and when it comes to refinancing, that's when there will be these new so-called new type of fees. Is it?
Yeah.
Okay.
So for refinance, they can actually, I mean, some of the clients actually prefer to refinance is because comparing to just within the same bank, they can actually explore other banks out there in the market. So most of the time it's more competitive.
Okay.
Yeah. So and the cost for refinancing is actually very little because bank give legal subsidies. So end of the day, probably is maybe they don't have to pay out any funds,
Right.
or probably it's within like 300 range.
Okay. Okay. I see. I see. I see. I see. Okay. Okay. Okay, so I think currently I think in market there's a lot of loan providers from banks to financing companies to brokerage, right? So generally, like how should someone decide which one to go for, or is there any difference between buying from a bank directly and going through a financing company? Yeah.
Okay, I think this is a very common question from my client
Yeah.
because they actually worry that if let's say to go through me, right, they will have to pay a certain fee or maybe the rate is higher. But actually that's not the case because I mean usually we don't have any conflict of interest, so we will try our means to actually push down the rates as much as possible because it doesn't affect our
Right.
referral fee.
Right.
Yeah, so I mean, as much as possible, I will say that instead of comparing from bank to banks or financial institution, right, you can just look for me. I mean, I will try to look out the best option for them.
Right. Right. Right.
Yeah.
Okay. So it's the convenience lah, the convenience to just check out everything at one glance lah, rather than going one to one lah. Okay. Okay.
Yeah. Mm.
Cool. So then another thing is, I think when it comes to home loans, right? Like, I mean, when it comes to homeowners, is there any common misconceptions or pitfalls that most of them actually make when it comes to taking up a home loan?
Okay, I think there's two very common misconception is that I mean, firstly, for refinancing case, right, the bank will actually give a legal subsidies, but some of the client actually prefer to go for like a no lock-in package or rather a short lock-in period so that they can actually keep doing the refinance every time.
Okay.
But if let's say you to stay with the bank for less than 3 years, right, there will be a legal clawback which is usually 1,800 to 2,000. So this will actually eat up some of the saving. So usually, right, for refinancing application, I would usually look at the first 3 years rate, which I find very important.
Okay. Okay. Okay.
Yeah. And second pointer will be, I mean, some of the client think that, oh, for refinance, the monthly installment doesn't drop by very much. I mean, usually it's like less than $100 per month. But I would say, right, the difference can be actually more than that. I mean, let's do a comparison, right? Okay, if we do a comparison, floating rate 1.3 versus a fixed 1.6% now, loan amount of 500,000 for 30 years. Okay, monthly installment is 1,638 versus 1,750. So the difference is like about $72. So the most you think that, oh, maybe 1 year I save $800 to $900. But that's not the truth because if your interest rate is higher, right, your monthly installment actually go towards towards the interest portion than the principal amount. So the actual saving, right, I calculated is about 1,500
Okay.
dollars difference for 1 year.
Right. Right. Right.
So that would be quite a good saving. Yeah.
Okay. 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 I see.
And I think the third one is that, oh, some people think that, oh, refinance very troublesome. You need to submit all the documents. In fact, the document actually have greatly reduced. It's not like last time you have to submit a credit card statement and all that.
Right.
It's like required documents is really quite limited now, and most of the fee are subsidized because some of the homeowners thought that this could be quite expensive to do the refinance.
Okay. Okay. Generally, what is the kind of cost that they have? I mean, after subsidy, what are some of the costs that they have to pay themselves, like when it comes to refinancing?
Okay, currently there's only two fees, legal and valuation fee. So it also very important is the loan size,
Okay.
right? So I mean, if we have a bigger loan size, we do able to negotiate for more subsidized,
Right.
more legal fee.
Right.
So I mean, let's say we to look at in general, right? It's about between 200 to 300. This is quite standard range.
I see. I see.
Mm.
200-300. Okay, I think this is highly reasonable. Yeah, it's okay. Sorry,
Mm.
back to the first misconception. You're saying some people, they in order to prevent a long lock-in period of 3 years, they tend to take packages without a lock-in, and as a result, you mentioned something like there's some legal clawback, that kind of thing. Like what is that scenario again?
Okay, so I mean, some of the client, right, they prefer to go for like short lock-in period because they want to actually not being locked out by the bank, so they can like keep doing a refinance, or maybe to actually make an early prepayment and all that.
Okay.
So, but if let's say you to stay with the bank for less than 3 years, right, the bank will actually take back the legal fee
Oh, so means
which they provided previously.
got it already. Meaning that they go with this bank, they choose a low lock-in period.
Yeah.
Then because the bank would have subsidized them certain things, like so if they choose to go for plans that does not have a lock-in and they switch bank eventually,
Yeah.
they switch, but then the bank can choose to take back the subsidy. Is that what I'm saying?
Bank will not choose, they will take back.
They will
They
take
will take back. Yeah.
Okay, got it. Okay, understood now. Okay, cool. So now I think one of the hot topics is on this refinancing thing, So what are your views on the market currently, with the rates changing pretty often, here and then? Yeah.
Yeah.
And who are eligible for this? Like, can any homeowner say, "Oh, now I want to refinance. Can I just come and do it?" Or is there any like regulations that they have to pay attention to?
Okay, so for refinance, it's very important that you have to check your lock-in period. I mean, usually, when you can actually look into refinances within like 3 to 6 months before the lock-in period ends. Okay, and for my view, for this current market is that interest rate has been on a downward trend since last year. But I believe it has come down to the rock bottom because if let's say if you look at the last economic crisis, 1 month cyber was ranging from 0.3 to 0.4 between year of 2019 to 2015. So it's about 6 years before they actually increased the rates. And if we look at the current 1 month cyber, it's already at 0.38%. So it's almost at the rock bottom already. So yeah, so I don't foresee that interest rate goes down by drop to 0.2 to 0.1% is quite I mean it's quite not possible.
I see. So generally, you feel that for anyone that is considering a refinancing, this period it's pretty a good period to look into because the chances of it dropping even further based on past experience is it's not very likely that it will still continue to drop.
Yeah, and one very important thing to take note is that when SIBOR drop, right, the bank spread will increase because it always happens because when SIBOR is low, right, even if you have a very high spread, you will end up paying a very low rate. So this is very common. So usually if you are looking to really go for SIBOR, right, you have to be quick to lock in at a lower spread. Because currently, right, let's say we look into the spread a few months back, the spread could be like 0.2, 0.3%. But right now it's already increased to 0.6 to 0.9% already. So I mean, if you really want to go for SIBOR rates, you have to be very quick.
Okay. I see. Okay, sorry. Just like you're saying on the SIBOR spread thing, that means that if someone wants to look at SIBOR, they should enter it now so that the spread can be something lock in the spread. Yeah. Can you explain on that again? Yeah.
Okay, because when SIBOR drop, right, bank will increase the spread. So also it will happen this way. Spread is the bank earning. So the higher the spread is, higher is the interest rate that is paying.
Okay. That means I don't really like. That means the rate is always SIBOR plus something like the spread. Okay, that's the one.
Yes,
Okay,
correct.
okay, okay. So when SIBOR drops, the spread will go up. So
Yeah,
for someone, you're saying if someone is considering SIBOR, they should come into it quickly to secure the current spread.
correct. Because if let's say you to look at cyber package, if let's say you to add the spread,
Yep.
probably I think about 1.2% to 1.3%. So it's
Okay.
very, very low now.
So if someone looking into SIBOR, they lock in, that spread it will be locked in based on the number of the years of that loan at this point of time.
Yep. Yep.
And after it ends, then that's when you need to review that spread again, then and that kind of stuff lah. Okay.
Yeah, that would be probably like 3 years later.
Okay. Cool. Let me see. So right now, right, if let's say someone comes to you, they say they are like exploring getting a home loan package. Out of that, the types of packages that's out there in the market, which one would you recommend them to take? Yeah.
I will say you look at what is their preference, because some of the homeowner, right, they might be buying this property for investment, so they would actually probably prefer to have the option to have this waiver due to sale. So waiver due to sale means that they can actually sell the property any point of time, and the bank will actually waive off the penalty in full. Yeah, so I also, it really depends on what is the preference. But if let's say we do not looking to sell the property, right? Currently there's this cyber package which I find very, very attractive. So the effective rate is 1.2%. It comes with a free conversion any point of time.
Okay, I see.
Okay, so free conversion any point of time means that right, if let's say cyber increase, right, they can actually change to a fixed rate anytime by informing the bank, and there is interest offset features. Okay, interest offset feature is not very common in the market. So this is interest offset feature is mostly benefit for homeowner that has unused saving.
Right.
So 2/3 of the saving that they put into this deposit, right, will earn you the home loan rate interest. So this interest earned, right, will use to offset the principal amount, so they can actually quickly clear off the loan.
Okay.
Yeah. So this is, yeah.
Okay.
And this package also have early prepayment, so it comes with a lot of features, and you get to basically you have no risk, because any point of time you can still change to a fixed rate for free.
Right.
Yeah.
Okay, cool. Yeah, so that being said, like now I think it's very attractive to go into SIBOR. So for anyone who likes to go into SIBOR, are their application always approved, or what are some of the possible reasons like why people don't get their approval? Like,
Okay, in general, home loan usually get approved, but bank take repayment record very seriously. So if let's say you have been making late payment, bank is less likely to approve your loan.
okay,
Or scenarios such as overseas income, sometimes it's not recognized by the bank. And if let's say you do have a bankruptcy suit or litigation suit, this will not be a straightforward case. This will be subject to bank approval.
okay.
Mm.
Cool. Yeah. So is there any? I don't know, just out of the out of mind. Is there something that someone can increase their chance of getting home loans approval? Because I know, like, say for example, okay, this I'm asking on behalf of the self-employed which is because most of the time maybe we decide how much tax to file that kind of thing like
Yeah.
So is there any like, is that part of a consideration as well? Like that means that the bank also see NOA to see how much you are earning before they can give you a certain loan, or is there like a rough gauge in general? Yeah.
Okay, for self-employed, bank will actually take a 30% haircut from the annual income. So, and in order to actually increase the loan amount, they can choose two ways. One is to show funds, means that show the bank how much you have in your bank account, use it to approve the loan. Or the second way is to actually place a fixed deposit with the bank as a collateral. So this can also help to increase the loan approval rate.
Yes. Okay.
Yeah, but just to share with you, right? MAS just announced last week that they are going to make the homeowner to refinance without subjecting to the TDSR, total debt servicing ratio. So they no longer require to pay the 3%. And this applies to residential property, commercial and industrial property. So
Yes.
if let's say you want to refinance right now, I don't think there's any issue, even if you don't have much income. Yeah.
Okay, I got it. I got it. So they in a way they relax on that TDSR portion lah, right? Okay.
Correct. Mm.
Okay, cool. Wow, today learned quite a bit. Okay. Lastly, right, is there any tips or advice? Let's say if someone in general, I think also to sum up today's interview on some of these questions, right? Like if someone would like to optimize their home loan repayments, is there any tips of advice or any like step-by-step thing to help them to decide, if they could or they could not? Yeah, that kind of stuff. Yeah.
Okay, I think there's two ways that can actually help to save a lot of interest. I mean, first of the pointer is that try to use less CPF on the property, because it's more expensive to use a CPF than a home loan. Because we all know that the CPF earn 2.5% compared to home loan rate right now is less than 2%. So if you use less than, if you use more home loan, in fact, it's cheaper.
Okay. I got
At
it.
the end of the day, right, if let's say you use CPF on the property, right, this CPF used on the property will not earn any interest. And in fact, you need to pay back with accrued interest based on 2.5% when you sell the property. So try to use more CPF, or you can actually reduce the money installment by stretching the loan tenure. So for refinancing case, loan tenure can actually go up to age 75.
75. Oh, as in loan tenor.
Yeah.
Up
Up to age of 75.
sorry,
Yeah.
75 years. Okay, it's age 75. Okay, cool. Yeah. So what you're saying is, if the ideal case is for people to use more cash to pay off their installments, because the current loan rate is lower than the CPF OA, like the generic 2.5%. Yeah. And if they have to use CPF, then try to clear more from the loan itself, so that eventually it's more worth it in the long run.
Okay, and I think there's the second pointer which I find very interesting. In fact, myself, I also very interested with this. Okay, for car loan, right? Usually, for interest is ranging from 1.88 to 2.88%, some even higher. So, and this 1.88 to 2.88, right? They are calculated based on the flat rate. So, in fact, effective rate is about 5 to 6%, comparing to a home loan rate is 1.2 to 1.8% effective.
Okay.
So, if let's say you're considered to buy a car, right, I would suggest that you actually you can consider to take the equity loan instead of a car loan, because this can actually help you to save a lot of interest.
Okay.
But for equity loan, right, this only apply to private property or EC after MOP. HDB will not apply. And even, right, if let's say you already have a car loan, right, you can consider to take up this equity loan, right, to pay off the car loan. Okay, for car loan, usually people will think that, it's not worth it to refinance because they already added the interest portion. But there is this rule 78 apply. So which means to say, right, bank will have to return 78% of the unpaid interest back to you. So I find it quite worthwhile for you to redeem the loan and focus on your money installment.
Okay. Wow.
Yeah.
That's a hack. Okay. Okay. So talking about coming to the equity loan. So you say it's only available for people who owns private properties. That is private properties or EC that it's after their MOP period.
Correct. Yeah.
Okay, so meaning to say, let's say someone, it's maybe their current loan amount is for example, maybe still left with 400,000. Then they can choose to take up more loan based on the new valuation.
Correct.
Saying, then they use that funds, they go and pay off their car loan, that kind of things. Then they just pay their.
Correct. Correct.
Okay. Then, but for that, is that tagged to any like lock-in period from their housing loan, that kind of stuff, like, or is that like more of like, I'll do a refinance, then I take a higher loan in my refinancing?
Okay, for home loan, right, there's the two kind. One is housing loan and one is the term loan. Term loan is the equity loan. Okay, so when you refinance, right, you can actually tell the bank that you want to actually take up an equity loan. For example, like what you mentioned, right, your loan amount is 400,000, and you choose to increase the loan amount back to 100,000. So the bank will actually give you this 100,000 back to your saving account. So this 100,000 you can use it to fully pay
Okay.
your car.
I
Yeah.
see. But is that provided that your valuation of the house is higher 5 years later?
Okay, this will depend on two factors. One is the valuation of the property and how much CPF you have used on the property. So
Okay.
this is a very the two most important factors to take note. Yeah.
Okay. Okay. I see. Wow, that's really like a great tip and advice. Okay, cool.
Mm.
Yeah, I think pretty much, thank you very much. I think today, yeah, the answers you provided to all these questions has been very helpful. I agree myself.
You're welcome.
Yep. Okay, cool.
Yeah.
Thank you. Okay. Yeah, I'll just we just wrap it up. Okay. Thank
Mm.
you.